Welcome back. The Reserve Bank has given indebted consumers at least 2 months more breathing room. Governor Gill Marcus announced today that the repo rate will remain unchanged at 5.5%, which means the prime lending rate remains at 9%. But she says that the bank is definitely in a rate hiking cycle, which means the next move is likely up. The bank's Monetary Policy Committee meets every second month. It surprised the market in January, lifting interest rates off 40-year lows and raising them for the first time since 2008. It's worried about the weaker rand fueling inflation. Higher interest rates dampen spending as consumers have less in their pockets, but there have been concerns that further rate hikes will weaken the economic recovery. Consumer spending is helping to keep the economy going, and it's already under pressure. Governor Gill Marcus has reassured that the bank is aware of the fragility of the economy and is trying to take measured action.
We certainly see it as an interest rate raising cycle. How long that will last depends on the circumstance. We're dealing with a great deal of uncertainty. So it's not as if we're saying, look, if you go to X, then the economy can handle it. If you go to X plus 1, it can't. The challenge is that the economy is fragile, and therefore it is not simply a function of what the central bank can do. We're one tool in a range of tools that the country has. And it's for all of us to work together to ensure that we strengthen the growth side of the economy.
Well, I'm now joined by economist Chris Hart. Great to have you with us, Chris.
Yes.
And unfortunately, this is cut off here, but we started coming out of 2008 at 11.5%.
That's right.
It's incredible. So we've come right down, and now we've moved to 5.5% after the interest rate hike in January.
Yes.
So an incredible difference, and we've spent a long time here, haven't we?
Exactly. It's the time that we've spent here, and it's almost got to a point where we've got used to low rates, but these are unusually low rates. One needs to expect this is the range. So if an interest rate sort of in the mid-range, one should be able to afford that. But this has given us a false sense of security in terms of what we can actually afford and the debt loads that we can actually carry, with it being so low. And now we're going to actually see this rate hiking cycle as the governor suggests.
Okay, so we came from somewhere up here.
Yes, all the way down.
We're now in a rate hiking cycle.
Yes.
Governor Gill Marcus is clear about that.
Yes.
So it's just a question of when the next hike comes. How high can we go?
Well, I actually don't believe we're going to hike much beyond the middle of the year, because we've got to look at what's happening in the US. They're busy tapering. That's going to bite at some stage, and that's going to see the rand weaken a little bit more. We've seen it weaken quite a bit, but it's going to kick that weaken. That then says we've got an potential inflation problem, and the Reserve Bank has to deal with not inflation that's happening now, but inflation that's happening next year and the following year, because you raise interest rates now and things have a lead and lag. So the raising rates now affects the inflation rate, or has a potential to restrain inflation rates later. 0.5% doesn't do it. We have to hike more. The only trouble is we are so over indebted. So we hiked 50 basis points. That helped to stabilize things at the moment, and I think that gives the central bank a little bit more breathing room, because the rand has at least stayed reasonably calm since the rate hike. It showed huge amount of, or it reaffirmed the central bank's credibility, and it affirmed that they were independent, and that was so important for confidence, and we've seen that in the wake of the hike. I mean, we were heading to a full-blown rand crisis at that stage because of all the other emerging markets that were also experiencing similar problems.
We'll look at the rand shortly.
Yes.
Let's first look at inflation, which
Yes.
is the big concern. I'm
Yes.
hoping that graph will arrive soon.
Yeah.
There we go. And we have to consider
6%.
6%
That's
is our
the level.
upper target, and we're hoping to be between 3 and 6. We're heading to that right
But
now.
have a look how long it's been, more or less around 6. So it's been sort of round about the 6 level, but that's not ideal. We should actually be sort of in the middle of the range, rather than at the top end of the inflation range, because it's very likely that we're going to see this inflation rate sort of higher and above the 6% level over the next few the next few quarters. In fact, for much of this year, it's going to end up being above the 6%
I think
level.
we're expecting about 6.6 by the end of the year. Is that still the expectation?
The problem is next year, when we're in a natural down cycle with inflation, is if the structural level inflation has already started to rise because we've got an inherent, the interest rates are too low, and so you actually have got the wrong price signals. And so you've got to actually hike rates now so that you don't have a longer term problem. And so in the short term, higher rates is not great for growth, but higher rates may be the exact remedy for inflation longer. And this is the quandary that the Reserve Bank is in. Growth is low, but inflation is high. And how do you actually, what do you actually do? The low growth, you said, okay, we should cut because of low growth, but because inflation is so high, you need to hike rates. And that's what they need to do. And you can see that coming through out of the Reserve Bank's meetings.
And they have said that previously that the inflation we're seeing is not mostly internally generated. It comes from outside, what's happening in the US, affecting our rand, affecting our imports.
Yes.
So we're at the mercy of these global forces.
Not only that, it's also at the mercy of our government, because the biggest or the highest portion of inflation, if you look at the various subcomponents, is what's called administered prices. The prices the government set, that's sitting at about 9.3, 9.4%.
So you're talking about electricity.
Electricity, municipal rates and taxes, that kind of thing, which is also affecting our pockets. So that's also, on the side, it's pulling up the inflation rate. And that's not going to, we're not going to see too much relief from that in the next few years.
We've had an inflation problem before.
Yes.
Look where we come
from.
So what was our economy like at that stage? Why are we trying to avoid this so much?
2008, the rand, when inflation hit that level, the rand was actually quite weak, but the economy was relatively stronger, and so the rand pushed costs up, but we were also still buying things, and so the demand was also pulling inflation up. Now what we've got is that we've only got the cost push. The demand is actually quite weak, and we can see this in the weaker economy. If the demand was stronger, inflation would be higher. And that's what the Reserve Bank is worried about. Because if demand suddenly did shoot up, and that can happen if you keep interest rates too low, where you borrow money and go shopping, then suddenly the inflation rate also responds to that, and then you've really got a problem.
Very quickly, because I want to look at the rand as well, and we can get that up in the meantime. But this weak consumer spending that you're talking about, a lot of economists have been saying, our economy is very fragile. Can we even handle another rate hike? Because consumers already aren't spending. Rate hikes mean they can spend less and they have more debt.
Well, the reason is that they've, for the past several years, they've been borrowing money to go shopping. And that's why they're so fragile. And the reason is that their interest rates have been artificially low. And that's basically why you actually say, whoa, let's get a sense of reality back.
Okay, so we need to balance. We need these interest rates.
The saver isn't even, if you save money, you actually lose utility on your money because interest rates aren't even compensating you for inflation. And so when you favor the borrower over the saver to that extent, you get imbalances in the economy.
We're running out of time, but the rand strengthened quite significantly since that decision today. Just a look at the rand. This is where we had the first interest rate hike in January. So we can see actually things have calmed down a little bit.
Quite a bit. It spiked a little bit weaker during that because there was that the Turkey was going into problems and all that sort of thing. But it's since calmed down, and the rate hike helped to stabilize confidence. Confidence is so important here. When we look back in 2008, you can see the rand kicking up into the the 12 sort of region. That was very weak, and that fed through to inflation. But if you have a look at the trend, it's been a fairly steady trend. It hasn't been wild. All right?
It hasn't been as volatile as we expected.
No, exactly. So we need to be aware that often these trends start like that, and then they accelerate, get to a peak, and then spend quite a long time strengthening, and I don't think we're going to weaken much beyond the middle of this year, and that's why I don't think we'll have interest rate hikes much beyond the third quarter. And in fact, if the rand has started a strengthening trend from that time, or even from now, it doesn't really matter. By the first quarter of next year, we can even start looking at a rate cutting cycle if the rand is behaving sufficiently.
Right.
But
You're
we'll
not
hold
the
our
first
breath.
economist who said that on the show this week. And the rand strengthened significantly today. You say
Yes.
confidence from the Reserve
That's
Bank.
confidence. Remember, it's confidence, and that is an important thing. If you lose confidence, the Reserve Bank would be in trouble. But they do have the confidence, and that's the point. We've got very good institutions from that point of view, and that's one of the big underpins to the South African economy and South African financial markets.
Thank you so much for your analysis, Chris Hart, economist. And we did ask for your tweets today, what this means to you, and a lot of relief coming through. So we can take a quick look at those tweets for you. Some bit of good news today that comes from Andrew. The repo rate unchanged for now. Watch after the 7th of May. That's what Rowan says. Rowan, I do believe that the Reserve Bank has really shown its independence, and we don't have to worry about any politicking from the Reserve Bank. Like Chris Hart saying, there has been an increase in the rand today. Just confidence, a sign of confidence in that Reserve Bank. Just some more tweets. No change in the interest rates, but the tone of Gill Marcus's speech reflects how split her committee was, and she did confirm that today it wasn't a unanimous decision. Dana, was that a warning from Gill Marcus that the next change could be in excess of 50 basis points, worrying for heavily indebted people? She did say that the exact increments cannot be determined at this point. Mzwandile, economist projections are that repo rates will increase in May. We'll have to see.